John Augustine, one stock you like over at Huntington Trust is Kroger. Stock's up over 15% year to date. They're buying a Wisconsin chain called Roundy's. Is this enough to help it compete with the likes of Walmart as well as Whole Foods?
Yeah, our thought is they've gained market share from both those two companies so far this year. That 15%, that all came in the beginning of the year. The stock really peaked in the first half of the year. Now it needs an earnings driver going forward, so Roundy's is going to help. We would suspect they may pick up some more to keep their earnings momentum going because they're doing a good job with the utilization of those stores and square foot revenues.
All right, well, you're also a fan of Marriott. Now, that was a bit of a mixed third quarter, and Wall Street wasn't crazy about the fourth quarter guidance. What do you think?
Yeah, Marriott caught our attention earlier this year. Marriott's a dollar guilty stock. Dollar went up, stock peaked earlier this year. It's had a tough time really since then. They're a 20% earnings grower. They're trading at a 20 multiple. I got a 1 PEG ratio in jargon terms. To us, it's a good valuation. We think moving into next year, as the consumers keep spending, they're going to be a beneficiary of that. We like that stock.
All right, well, you are also positive on Amgen. They've been flat year to date, despite all this talk about where government should come in and depressing drug prices, and it's been a very volatile biotech year, but Amgen's flat. What makes you think it's going to pick up?
Agree with you. We saw big moves in those stocks, especially last fall and early this year. We think they're one of the most consistent. We're looking for consistent plays, Huntington Trust. So we're looking for consistent plays. We want to be in the healthcare space. To us, that's one of the most balanced with respect to earnings growth. Valuation on the PE side, staying below the radar screen because we know healthcare is going to be in the spotlight as we move into presidential election next year.
All right, and then finally, you are constructive on Constellation Brands. It's up over 30% this year. But how will the big InBev SAB Miller deal affect this one? Because they're in the beer business too.
Yeah, Mega Brew deal, right? Came out. So Constellation Brands, consistent performer to us. It's our theme woven throughout here as consumer services, consumer spend. We do not think they should be negatively impacted. Distribution side, different channels that they operate from within the U.S. that have been successful. With Constellation Brands, it's a matter of keeping it going. And oh, by the way, the key for Constellation Brands comes second half of next year. That's when they're going to have tough comparisons, earning per share comparisons to cover. So that's what we're watching, second half next year earnings estimates.
All right, well, thanks a lot, John.
Thank you.
Thank you for watching The Street.